Welcome to the Daily Forkast, January 13th, 2022. I'm Angie Lau, Editor-in-Chief of Forecast News, covering all things blockchain. Well, Hong Kong's Monetary Authority, which is the de facto central bank, has launched a public consultation after publishing new proposals for the regulation of crypto. We're going to take a look at that story and a whole lot more coming up. Let's get you up to speed from Asia to the world. Well, let's kick off with some of the top stories coming out of Asia today. First up, prosecutors in South Korea have demanded life sentences for 7 executives involved in a crypto scam. The 7 execs from the now-defunct V Global crypto exchange have been charged with swindling over 50,000 members out of their money by promising 300% returns on investments. Members were also offered a $1,000 commission for referring new users, and while users did receive some of the promised returns, it was discovered that those funds were taken from new users' deposits, much like a pyramid or Ponzi scheme. Prosecutors said the defendants have not made sincere efforts to recover the losses that total more than, get this, $1.8 billion, nor taken full responsibility for their actions. The verdict and sentencing are due on February 11th, and we will be keeping watch on that. Now, over in the northeastern Australian state of Queensland, an innovative project is using blockchain technology to improve water market supply chains. Now, more than 1,000 farmers have partnered with blockchain firm Civic Ledger to address water security and fair access issues by incorporating the Water Ledger trading platform into the state's Mariba Dimbula water supply scheme. Now, water supplies are vital to the region as it is a major producer of avocados, mangoes, and bananas. Water management is a critical policy issue in Australia that some experts say hasn't been a priority, despite the country frequently experiencing droughts and bushfires. You can find those stories and a whole lot more at forecast.news. In Hong Kong, plans for new crypto regulation are on the agenda. The Hong Kong Monetary Authority, or HKMA, is looking for feedback now after publishing a paper on options for regulating the sector. Forecast News' Timmy Shen has more.
The HKMA paper says emphasis has been placed on user protection in developing the proposals. It goes on to note that stablecoins in particular present risks for monetary and financial stability, as they have higher potential for becoming widely accepted as a means of payment. One expert told Forecast News that players in the industry have understood things would change for some time.
There is a move towards regulation, but I think they want to balance what you would call consumer protection and broader financial stability, as well as, the ability, in particular with stable coins, to manage and effectively drive monetary policy, but also not hamper innovation.
Quinlan says he thinks Hong Kong is making moves that most global financial centers will also make.
My broader view is Hong Kong seems to be positioning itself as an institutional crypto center, right? Something where the regulatory environment is mature, the products are mature, the actors are fully compliant, have all the relevant licenses.
The HKMA says it is looking into whether stablecoin issuers should be regulated under the banking ordinance, and Hong Kong isn't alone in going along those lines.
There is a trend, at least at the discussion level, to move towards bank or bank-like regulations for stablecoins.
Indeed, Malcolm says the US is another example of a country where this is being considered. The consultation is open until the end of March, with the HKMA expecting to formulate a plan by July this year, and for the new regime to be in place by 2024. For Forecast News, I'm Timmy Shan.
Well, the New Year's slump in cryptocurrencies has been grabbing headlines, and while it might be hard to see any silver lining amid all the gloom and doom talk, is it time to build fresh positions? Michael Wu, CEO and founder of Amber Group, joins me to weigh in on this new economy. Great to see you, Michael.
Thank you, Angie. Great to see you too.
All right, okay. Whoa. Major digital currencies, whether it's Solana, Ether, Cardano, and of course Bitcoin, among many others, Michael, they've had a rough start to the new year. This has got a lot of people questioning the stability of crypto. But do you think this decline is instead an opportunity to build positions and portfolios? What do you think?
think we will more or less understand that this particular volatility and near-term sell-off is driven by Fed's increasing hawkish stance. They are more likely to hike rates for multiple times this year, and all of that, of course, affect all asset prices, including crypto. Now, with that said, I do think if we do see a further sell-off from here, let's say Bitcoin go down to, say, 30 or 35,000 levels, or Ethereum below 3,000 or below 2,500 or around 2,000 level, these are great levels to start building more and more Bitcoin and Ethereum positions, or add onto your existing positions in a what I call almost like a risk neutral kind of way. Now, with that said, I do not recommend what we would typically call catching the falling knife in trading terms, which means do not go too crazy. Just take your time, level your bids, or wait until the market stabilizes at a favorable level and start to build your positions over time.
Yeah, catching a falling knife is a dangerous hobby, but for someone new to crypto, and for those who are starting the new year, trying to think about portfolio diversity, how should one think of digital instruments and products as basis risk appetite? There are some EFTs tracking crypto, yield-bearing products, etc. What are some of the things that could be considered here?
Oh, I think you have much better options out there with our platform, Wealthy. You can simply come onto the platform. I think for, like you said, a lot of folks new to crypto or with less previous finance or crypto knowledge, stay to the basic and start with a simple portfolio of, let's say, half in Bitcoin, a quarter in Ethereum, and some in dollar stable coins, or one your favorite blue chip coins, and park them for interest, so that over long term, not only do you gain from the value increase in these assets, but also you enjoy an attractive yield, compounding yield, by parking them on the Wealthy platform.
But of course, for fear of talking the book and giving people some kind of specific investment advice, which we are not doing, by the way, broadly speaking, what should people be thinking about in terms of risk? Why is diversity important? And, to your product and so many products out there that provide really a plethora of choice, how do you think about making those decisions? What are the things to think about?
There are a few principles that you can never go wrong with, right? The first one is never risk more than what you lose. This means do not take on leverage unless you're very sophisticated and you really know what you are doing with leverage. And secondly, do not take on large investments that are out of your risk comfort zone. Set your monthly or annual investment budget or investment goal, have them grow from there. And then secondly, I think stay long term. In the short term, there's always going to be volatility. Timing is always tricky. It's always difficult. Over long term, actually, the best investments look a lot more clear. The ones with best fundamentals.
Clear assets to hold, but of course we always have to do our homework in the new economy, and we appreciate your insights, Michael. Always good. And that's the Daily Forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.